Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, if you look at the Nifty, it's absolutely flat right now. 25,100 still remains on the D Street. But despite all the choppiness, we have now started to see some, swiftness or volatility right around that flat move. You can actually see the markets trying to toy whether they will stay above 25,100 in the green zone or whether they will give up the last 3 to 4 days of gains that we've been logging in onto the D Street. It's the IT stocks that are holding up strong in trade today. Along with it, several other smaller pockets, cement stocks, power stocks, renewable energy, that's buzzing in trade. We're also looking at pharma, metal stocks also moving up in trade. Those are some of the pockets that are definitely holding up and about. Several stock specific ideas that we have been discussing throughout the course of the day have also been in focus as well. But time to welcome our guest on board. We have Mr. Ambarish Palika, market analyst, to join in and to share with us his views on the markets. Warm welcome to you, Ambarish, and thank you so much for taking the time out. It's been a long time. And you're joining in at the better times when finally we've been seeing third consecutive day of 25,000 back on the D Street. Things are looking up. Seemingly we are climbing all walls of worries that existed over the last 6-8 months or so. But what's the sentiment that you are reading at this point in time? Do you really feel that the risk on sentiment is improving now?
Thanks actually for having me. It's always a pleasure to be on your channel.
Thank you.
Now, looking at the markets, I think clearly we made a bottom. I mean, that was a question a couple of months back. I think last time I appeared on your channel, I think that was a question as to where the bottom is. But I mean, at least as of now, we are very clear that the bottom has been made at closer to those 22,000 levels. And from there, we have started a new move up. Now, the question is whether this move will continue further from here or not.
Correct.
Now, broadly, I mean, I would say we are in a band of 23,800 to 24,000 at the lower end and 25,000 to 25,200 on the upper end. Now, based on the sort of data points which have been coming, based on the sort of news flows, regulatory announcements, I mean, all these have been benign for the markets, and because of which we have seen that the markets are closer to the upper end of the sort of a band which I'm talking about. And it
Correct.
is struggling out here. I mean, let us be very clear. I think it's the markets are struggling at this point of time. I mean, closer to this band. Now, if it crosses 25,200 decisively, and when I say decisively, I'm talking of it crossing by at least 1%. So if it crosses these levels decisively, then I think we are talking of 26,000, 26,200, which is the, I mean, earlier high which we had seen. So, I mean, in case it crosses these levels, I would say that the markets would, I mean, tend to become expensive. But yes, I think liquidity can drive it further because we have seen that there are a lot of momentum players in the market. So once the markets cross a certain level, you have all these momentum players jumping in, and liquidity is there. I think there's enough liquidity across, whether it's with investors or with the mutual funds. So liquidity itself can take up to the higher levels. But at those higher levels, like I said, fundamentally, I would find it expensive. So I would look at profit booking opportunities at those higher levels.
Okay. Profit booking opportunities at higher levels is what you're looking at. This fresh wave of momentum really kick-started with the RBI's monetary policy
Right.
that infused some fresh moves on the higher side. Again, the question is how long will that enthusiasm sustain on the D Street, and does it really structurally change anything, be it for the banks, be it for the rate sensitives like real estate, maybe autos for that instance? How are you looking at what's really happened with the monetary policy? What changes as a cause for these streets?
See, I mean, clearly it was a surprise announcement because the street was discounting 25 bips and what was announced was 50 basis points. So that clearly was a surprise. And it helps and it is, I think, positive for banks and the rate sensitives, which also include real estate, consumer goods, as well as real estate. I think these are the couple of sectors which it affects positively and directly, and because of which we have seen a lot of action in these particular sectors. But overall, if you're talking of longer term, lower rates means, and especially in an economy which is growing, it would mean more credit going ahead, and that is positive for the economic growth. So in the longer term, it is good for the overall economy, but in the short to medium term, the beneficiaries are these two or three sectors I'm talking about.
Now, Amrish sir, help us understand, basis the RBI policy and basis the improvement in the markets, of late post Q4, if I could ask you, have you made any changes to clients' portfolios in terms of any additions, deletions that you may have done?
No, I mean, if you look at the Q4 earnings, they were more or less mixed, but slightly on the positive side. I would say the positive side basically because of the sort of numbers which came in Q2 and Q3, because of which a lot of analysts, including ourselves, had lowered our expectations. And market is always expectations versus delivery. So your expectations are low for Q4. The delivery was as good as Q3 or slightly better than Q3. And because of which we have seen that the markets have reacted positively for the earnings. But again, going ahead, I think Q1 and Q2 FY26 should ensure that the trajectory is up. It's only then will you see that the markets are sustainable going ahead.
So, Amrish sir, help us understand few other pockets that really shot up into momentum were the PSU stocks, namely defense, railways, or some of them have started to pick up pace as well. Power-related names, PSUs, they are also picking up some pace now. How are you looking at these spaces now? Have they run their course for the second time around this in the current market rally?
See, defense and railways, I think there is some more leg up because there is momentum in these stocks. But then, if you ask me fundamentally, I would say that this pocket has become expensive. So as a fundamental buyer, I will not buy defense or railways at the current levels. But as a trader, it makes sense because there is momentum. Uh,
Okay.
like from a fundamental angle, yes, I think the order flows have been excellent. And post the Indo-Pak skirmishes, which we had, which to a certain extent we also called Indo-Pak War, I think that has helped sentimentally the defense space. But then what we should also keep in mind is that the sort of order flows which have come in, quite a few of them have order books full for the next possibly 7, 8, 10 years. I mean, you can't be getting more orders and delivering after 10 or 12 years.
Yeah.
You need to increase your capacity. And can you increase capacity overnight? No, it's not possible. It takes time because you have to have the machinery in place, you need to have skilled labor in place. So, what I am afraid of, especially as far as defense and railway space is concerned, is that there could be execution issues going ahead. And the market is not discounting that as of now. So, as and when
Okay.
that happens, you'll see, I think, a decent correction. I think that would be the time to start buying because that is the time possibly most of the companies would be in a place where they are expanding capacities. So if you're talking the next 5, 7 years, I would be bullish on the defense and railway space, but I would look at the right buying opportunity, which is at a lower level.
What about renewable energy power? This space, have you been looking at a Suzlon? What's happening maybe on SJV and SW Solar, such stocks?
I mean, this space I'm quite bullish on because I mean, the sort of growth which you can see, at least for the next 4, 5 years, is going to be stupendous. But something like a Suzlon, I mean, after the sort of run-up which we have seen, it has got expensive. Despite the sort of earnings which we saw in Q4, I would say at the current levels, Suzlon is expensive. But then, if you're looking at something like a SW Solar, I think there's an opportunity because we have seen an extremely good correction over the last 6 to 8 months. And as far as the power generators are concerned, Tata Power and NTPC, I think these are the two stocks to go with. I mean, if you're taking a bullish view on the power space, I think you should both Tata Power and NTPC in your portfolio.
Okay, Tata Power and NTPC, noted that. Have you also assessed what's happening with the Adani stocks of late? Today, most of them are actually up and about. It started off with Adani Power, especially by around 1:32 p.m. onwards, when there was again a block deal here. Shares worth 194 odd crore rupees changed hands on BSE, and therefore the stock got into momentum, pulling up all the other stocks also along with it. Adani Group stocks, where are you keeping your focus, sir?
I mean, if you look at the Adani Group stocks, most of them are linked to the economy the Indian economy. And if you're bullish on Indian economy, then I think you need to have at least some of the Adani stocks in your portfolio. In that, I would surely talk about Adani Ports. which clearly has that 27-28% of India's port capacity. So that's one stock which can be held in the portfolio.
Okay. I'll also ask you on the food delivery space. There is a new name that's being talked about now, Rapido, which is not listed. But people are talking about how the company is aggressively pushing for this same space where erstwhile players, Zomato, that's eternal now, and Swiggy have burned their fingers also. And Rapido seems to be talking about lower commissions, probably wanting to take market share. I wanted to assess you to assess this entire space because just now, after a long haul, investors had just started to get used to of some profitability being seen and some seriousness of the promoters of Zomato and Swiggy on the way forward. But at the same time, question marks on the cash burn on the Instamart and Blinkit kind of businesses happening. Now, when it comes to food delivery, which is already being seen as a smaller chunk rather than the e-commerce business, how would you look at if a third player comes in there, sir?
I think, like the sort of margins which they were talking of earlier, I think that will take a while, especially for Swiggy and Zomato. Uh, and as long as you have new players coming in and burning cash, even the older players will end up burning cash for a while longer. So I think it would be negative at least for a while. But at the same time, I think it's a great time for the consumers who will still be getting extremely good deals.
Yeah. Okay. And how about, when we extend this to the traditional brick and mortar players, sir? Demart today, again, a big block deal has happened there as well. And we are seeing some stock price erosion. But this entire year so far, financial year FY25 also, has been rather, muted for, large companies like Demart, for instance, which have been erstwhile core portfolio stocks, wealth creating stocks, just because they haven't stepped on the bandwagon when it comes to changing habits of urban Indians, looking at how they fulfill their daily FMCG needs. How would you look at a DMart, sir?
See, the brick and mortar part of the business clearly is, not really growing as expected. And even the margins are under pressure. And they have not been able to go online. They could have had the first mover advantage and they could have repeated, the same success which they had in brick and mortar, but they failed to do that. And as more and more consumers are moving online, I think it'll be a bit tough for Demart even going ahead. So I would recommend someone to buy Demart at this point of time.
Okay, got that. Shifting focus now, I'll talk about the heavyweight sectors, banks and IT, one by one, both of them. Banks, financial services space that emerged as the top consensus play at the beginning of 2025. We are nearing the halfway mark now. Of course, the recovery rally that we've got till over 25,000 yet again has been driven largely by these large private sector banks, NBFCs, slightly now with PSU banks as well. What's your fresh approach here?
I think one should still remain bullish on the banks,
Okay.
but I would possibly wait for a small correction to get in again. And here, I would surely look at some of the smaller private sector banks, the smaller PSU banks, which are yet to really participate in the rally. But talking of the next 2 to 3 years, I think one should be bullish on the banks as well as the NBFC space.
Okay. Any key choices that you would still bet big on? I mean, would you still rather go with the large caps, ICICI, HDFC, despite fresh highs, 52-week highs that we've seen here? Or would you add other names now to the list?
No, see, when you're talking of Axis, ICICI, HDFC, I think these would be in the core portfolio. But at the same time, I would say that one should also add IDFC first, maybe Bank of Maharashtra from the PSU space. I mean, these are the smaller names which are there, but which I think can actually outperform the broader indices.
Okay. Now, what about IT stocks, sir? How would you look at that?
IT stocks, although today they have been doing decently well, but I would still be a bit cautious, as of now. Let us see as to what really happens in the US because I think July 9th is a very important date. And that's when we'll know, since that 90-day moratorium gets over, that's the time we'll know exactly what's happening across as far as the tariffs are concerned. And based on that, one should be able to take a view on the US economy. So I think I would wait for a while as far as the IT space is concerned.
You will wait for a while. Yes, absolutely right. We're just a month away from that deadline on the tariff, reciprocal tariffs as well. Even though on a two-nation tour, Sweden and Switzerland, Commerce Minister Piyush Goyal has talked about as of yesterday, and our group editor Siddharth Zarabi is covering that visit very closely. Commerce Minister did reiterate that India is going to have a very pragmatic approach there, and that they are very confident of how India will progress with the negotiations on that table. They are waiting to find out which are the points that they need to really touch base upon. Any suggestion on what kind of a trade deal will probably be seen as conducive with stock market, investors here back home, and what will be seen as a big deterrent? We've already seen a template with the UK now that
Right.
US has, and an initial phased deal with China as well. So, where do you think India will probably look at striking that balance?
No, I mean, especially on the exports side of it. I mean, if you're getting a better deal than most of our competition, I think that should be something which the markets would cheer about. It's not a question of the percentage of duty. That percentage of duty should be comparably less than what it will cost the competition. I mean, exactly. I mean, what we saw a couple of weeks back as far as textiles is concerned. So,
Okay.
so I think overall, if the trade policy is such that we are better than the competition, I think the markets will cheer.
Markets will cheer. Okay. So that's as far as the entire tariff talk, and of course, something which is being seen as a big overhang for the last 3 to 4 months odd will now see its course going forward from here. Today, another theme that came into fore was the cement basket with Grasim, Ultratech Cement again coming on the brokerage houses radar, upgrades coming in, target surges also being seen as well. Now, with Grasim, it's not just being seen as a cement player at large, but also with its paints component, where they are aggressively pushing for too. But I just wanted to first tackle the cement part and then look at the paints space as well. To you specifically on the cement basket, which one would be your top bet when it comes to this space? Would you stick with an Ultratech? Would you look at the Midcap? So much of mergers and acquisition has taken place this year so far. What do you foresee?
See, cement, I mean, clearly is based on the infra growth. We have seen a huge infra growth, especially in the last couple of years post-COVID. But what was happening was we had, I mean, the total volumes going up, but along with that, the margins did not go up. Now, I mean, going ahead, the next couple of quarters, I see a margin expansion happening, basically because the sort of increase in capacities, I mean, will clearly fall short of the sort of a demand which we are projecting for the next foreseeable 2 to 3 years, and because of which we will clearly see the margins moving up. So, cement is one space to be in, and Ultratech would be my, I mean, the first pick because I mean that's the leader in that space. And among the smaller ones, I would surely look at JK Lakshmi, Nuvoco Vistas. I think these are the couple of other stocks which can be there in the portfolio.
Okay, got that. So that's the cement basket. What about paint, sir? Just about yesterday, we saw that report indicating that how there is a competition commission of India, report as well that's coming in talking about how they have been approached by Grasim that Asian Paints is probably deploying some methods that are anti-competition, and something that is definitely not being seen in the positive light. The stock prices also suffered a bit. How are you looking at Asian Paints, one which is the largest company by market share when it comes to the paints business? It's been a leader for so many decades now, but of course we have large conglomerates now entering like Grasim or a JSW into the same space. And how do you think things will pan out, and what should investors be keeping in mind if they look at paints as their core portfolio stocks? How should one go about selecting it? Last 1 year has been devastating for investors to see.
Absolutely. I mean, if you look at something like Asian Paints, it's lost nearly 40% in the last 1 year.
Yeah.
And I mean, again, like Asian Paints is by far the largest. I mean, the closest competitor is the revenue is 33% that of Asian Paints. And when we talk of the paints division of Grasim, in the next 3 years, the sort of revenues they're talking of would be one third of Asian Paints' current revenue. But yes, I mean the amount they spent on publicity, on brand building, and at the same time, I think Asian Paints also went a bit slow in the advertisements and publicity at that point of time because it didn't make sense when Grasim is spending a huge amount, and in fact, that's not a revenue expenditure for them. I mean, that was a capital expenditure because you're creating a brand. So I think going ahead, I mean, we should see Asian Paints getting back again on track. And if you're talking of the next at least 4 to 5 quarters, I would say it's clearly time to start buying Asian Paints at this point of time, because the valuations have become decent. Although we have seen the margins suffering a bit in the last 2 quarters, I see getting back on track, possibly over the next 3 to 4 quarters. So time to buy Asian Paints.
Okay, time to buy Asian Paints. We'll definitely look at that one and chunk that out for all the viewers. That should give heart to a lot of long-term investors. Where the patience has been tested for fairly long time now. Let's look at the sectors that we haven't touched base upon. Pharma is something that we haven't discussed with you. Again, an export component, something that was probably very volatile during the time the tariff talk was at peak. How would you look at a fresh on pharma? There were so many contrasting statements that were made. First, it was left out of the tariff ambit. Then there were statements that it will probably see the biggest ever tariffs that it would have ever seen. Now there is absolute lull. We do not know how things are progressing. There's also an evolvement of the CDMO space that enthused a lot of analysts to look at this as the next big theme probably in pharma. What's your
Right.
fresh approach, sir? Any top stocks that you could mention?
In fact, what I believe is that irrespective of whatever tariffs are imposed on various sectors, they cannot afford to put huge tariffs on pharma because end of the day, India is the global pharmacy, and they cannot afford to increase the healthcare cost for the US citizens, which is already quite high. It can't go up further from there. And in case that happens, there will be a huge amount of backlash, which politically President Trump can't afford. So, irrespective of the rhetoric, I don't really expect any major increase of tariffs on pharma.
Okay.
And
Okay.
here, if you're talking of the picks, I mean, clearly it would be Dr. Reddy's and Lupin for me.
All right. Okay, we'll keep that in mind. How about the auto space, sir? That's another one that we haven't discussed yet. Again, when we talk about the tariff front, it was the first one to see that first, tariff hike being brought into force. Some companies which are auto components are direct, kind of either beneficiary or probably being seen as those will be hit the most in case the tariffs are higher there. Tata Motors, because of its JLR component, is also seen as the first sign of an impact that will be seen. Tata Motors itself came out with its reports for the next 2 years of CV business outlook on the market share that it shared. But the stock has really been again very long haul consolidative phase. How would you look at autos and what's your top choice there?
I mean, assuming that I mean there is no proper trade agreement before July 9th, I mean it could affect those companies which are selling completely built units, like someone like JLR. But when we talk of auto component manufacturers, I don't think they'll be affected as much, basically
Okay.
because most of the larger ones have their plants in US. At the same time, if President Trump wants to manufacture vehicles in US at a cheaper price, he cannot do so without, I mean, getting like cheaper auto components. You cannot be importing auto components at a huge tariff and trying to manufacture cheap vehicles in US. I don't think that's possible. So I think there would be some rethink as far as that is concerned. And other than Trump tariffs, I think the biggest issue which the auto space is facing is the rarer issue of China.
Yes, yes.
So unless something, I mean, some clarity comes on that in the next 2 or 3 weeks, I think that could be a bigger problem for the auto space than Trump tariffs.
Okay, and any key companies that you're watching out for that could probably feel the heat?
In the auto space.
Yes.
Yes, I mean, I think all those companies who have a decent exposure on EVs, like for example Tata Motors, I think face a heat. Mahindra and Mahindra to a certain extent. I think these are the companies which can face the heat.
Okay. Anything that you're avoiding right now, Mr. Baliga, when it comes to the markets right now, something probably that's not really even woken up after the Q4 earnings, what would you really stay away from?
No, like I said, I mean, two sectors I would possibly stay away right now. As an investor, would be defense and railways. As a trader, I would say it's possibly still a time to ride the rally, but not as an investor. But,
Okay, fair.
but if one has the portfolio, possibly one should hold on with a trailing stop loss because you don't know as to how far this can move because of the momentum.
Okay. And lastly, sir, you began by talking about how previously we had discussed whether a bottom is in place. Now you believe that is definitely in place. But yes, I wanted to ask you an outlook. We are already nearing the H1 mark
Right.
of calendar year. For the next 6 months, how are you looking at the markets and what levels that you could foresee?
I mean, for the year 2025, I would say the calendar year 2025, I really don't see the markets going much beyond the earlier highs we had seen. And in case it goes closer to those levels, like I said earlier, I would possibly look to book profits. Unless, of course, I see those levels more towards Diwali, more towards December, because by then, I mean, at least you've seen, I mean, 2 quarters numbers. So if they are in line, then yes, I think I'll have to change my view. But if they are something similar to what we have seen in Q3 and Q4, I would be a bit cautious at higher levels.
Bit cautious at higher levels. All right, Mr. Baliga, it was a fantastic half an hour conversation with you. As is always, I hope you have a
Yeah.
fantastic time and we'll see you soon on another edition of Market Today. Take your views on the markets overall. Thank you so much.
Thank you. Look forward.
Thank you so much. All right, viewers, 25,100 being tested now on the Nifty, 4 5 points down in trade. So after being steady above 25,100 for longish part of the day, we are now seeing that level being tested. IT continues to be the top moving sector even towards the closing edition. So you can see 1.7% uptick on the Nifty IT index. Tech Mahindra, HCL Tech, Infosys, the large caps, Wipro, that were definitely driving the show. Among the top 5-6 movers on the Nifty are from the IT pack as well. Even in the mid caps, you have Coforge, Persistent, Emphasis. All of these mid cap IT names also definitely supporting the sentiments today. Media stocks were up, pharma, consumer durables, FMCG, metals. These are also the pockets that hogged some limelight. Small caps continue to be in the green, but it's a mixed trend. So mid caps have slipped into the red right now. Banks clearly on the back foot today, led by PSU banks, which have seen a decline of nearly half odd percent now. Real estate also slipped. You also had private banks, financial services, autos, oil and gas declining. So I think the rate sensitives that were rallying on the last 2-3 sessions from Friday onwards till today because of the momentum on the rate cut front have given up some kind of gain. But cement stocks definitely rallying. Grasim 3.6% up. From the pharma pack, Dr. Reddy is something that Mr. Balika also talked about, one of his favorite stocks in the pharma space. What dragged? Trent, 1.5% lower. Asian Paints, 1.3% lower. But here, Mr. Balika believes that this is the time to, in fact, look at Asian Paints and buy that. Maruti, Bajaj Finance, Tata Steel, these were the stocks that were seen declining. About a 0.4% uptick on PSU stocks. Defense names like HAL, BEL definitely rallied today. Oil and gas stocks were up. Power stocks were up in trade. On the FNO, you had Manapuram Finance as the top mover. Blue Star moved up 4% from the consumer durables basket. Oracle Financial again from the IT specific stocks moved up as well. On the downside, Titagarh Rail, RBL Bank, Piramal Pharma, Indian Bank, these were the stocks that gave up some moves. On the broadest index, Nifty 500, Nelco, 9.7% higher, very strong move. This is one of the stocks that Mr. G. Chokalingam has often mentioned on our channel as his top favorite stock. So that's moving up. Prism Johnson, about 9% higher in trade. That moved up in trade too. Let's look at the names like Reliance Power, 11% higher, crossed over the 70 odd mark for the first time in the last 10 years. So strong momentum that continues on this one. Moltech Technologies also moving up. GE Power, another stock that moved up. Ratan India Enterprises, 20% circuit. Ratan India as a sector had a move today. Automotive stampings also moved up in trade today. Those were some of the stocks that showed some tremendous moves towards the end of the session. All right, viewers, managed a 1 point of an uptick, saved the blushes, and just tried to, continue that upward momentum for the fourth consecutive session on the markets on the positive side. 25,104 on the Nifty right now. We'll leave you at that, but do stay tuned even beyond the stock market hours. News coverage continues from the world of business and finance.
Good afternoon, ladies and gentlemen. Welcome to the most comprehensive review of markets that you can think of on Business Today Television. Let's start with the basic chart of the Nifty first.